Eric, thank you so much for being with us here today. And at a big moment in time for Ramp, you are one of the hottest startups. You raised at a $16 billion valuation over the summer, and then like 8 weeks later raised at a $22.5 billion valuation. You just crossed $1 billion in annualized revenue, 45,000 customers, so a lot going on. But first, I want to just talk about that number. You look at like $1 billion in revenue, and then a $22.5 billion valuation. Is the math mathing? Or are we in some kind of like valuation hype cycle? What is happening? How does that work?
You know, I think Ramp is just growing so unbelievably quickly. Over the last year, we've just about doubled revenue. The fastest growing public software companies, for reference, expect and hope to grow something like 20 to 30% over the next year. And so the velocity that we are growing at, combined with the scale of the company, is part of what's getting investors so excited. But beyond it, I think the unusual part is Ramp is actually growing even faster this year and doing it while generating cash flow than we did last year. And so when you combine that last with the sheer scale of the market, there's over $2 trillion spent in the United States on corporate and small business cards, which is just one of our markets, and we're something like 1.5% of that market. It's hard not to get excited about the potential ahead.
So hyperscale has been in your bones since even the company pre-launch phase. Yep. You and your co-founder, Kareem, sat down together and you said, we want to try and create a unicorn company, which is a $1 billion valuation, within 18 months. Yep. No company in New York had ever done that before. Why is that such an ambitious goal? But you manifested a $1 billion company because you did it. Within 18 months, I think you were there. And with 2 years, you had like $100 million in revenue run rate about?
It was, that's exactly right. From 2 years, less than 2 years from incorporation, Ramp had been valued at not just $1 billion, but $1.5 billion. Within 2 years of the launch of the company, we surpassed over $100 million in revenue, and just a few years later, last month, we just passed over $1 billion in revenue. For us, I think it's two things. First, like you hit on this aspect of speed. We're religious about it. We count the days. We're 2,367 days old.
But you know exactly how many days old Ramp is.
We do.
Why?
I think it creates this urgency. I was always inspired. I think about leaders like Frank Slootman, who wrote Amp It Up and just talks about the default state of an organization. Unless someone is driving and leaders are creating tempo, things slow to a halt. The expectation is you decelerate. And it's easy to say, you know what, why not Monday instead of doing it on Friday? We want to instill that urgency to say, today is the only day 2,367 we're going to have. We're going to make it count. And also, too, when every day you're thinking about what did we get done over the last 30 days, over the last 60, you can measure. And you can start to make trade-offs and constraints. And you can say, OK, when I look at my last month, these activities really mattered, moved us forward. Let's do more of those. And these other things, even though I liked it, were not as impactful. I have to say no to these things so we can grow faster. And so that's a big part of it. The last and other important reason for us is our whole mission is help our customers spend less. We want the same for our own company.
That's a kind of a novel idea. I mean, and I want to talk about that too, just the idea for Ramp and explaining it to make sure everybody understands. But it's flipping the incentive structure on its head of the way that corporate credit cards have traditionally worked, where it's like the more you spend, the more points you get. You're encouraged to spend more. You actually want people to spend less, which actually sounds like a bad business. Is that a business that's viable?
Well, it's some of the largest companies in the world are in this line of business. You look at JP Morgan Chase, an over $800 billion company, American Express, $230 billion company, proving that you can do great by getting people to spend. Now, I sold my last company to Capital One, and I learned how this industry worked, what made it great. But I found it so deeply strange that at the core, customers were working to make the banks just a little bit worse off by gaming the reward systems. And the banks were incentivized to go and devalue the reward system to convince people the points were worth a lot and then devalue it in the background. And we just thought this is a massive opportunity. What if actually we wanted the same thing as our customers? And what if our goal was not to go and give them the minimum points, but actually just help them spend less? You can compete on value, how much better than you make your business, not competing on price, who's giving away more. And so I think that was the other motivation in attacking this industry. We believed, we didn't know if it would be us, but we thought at the end of the day, this is how the industry should settle, with companies working to make their customers better off and customers genuinely choosing the provider that's helping them grow. And I think that's been the big secret behind Ramp's rapid growth.
So you were not the first startup in this space. There was another competitor, and still is another competitor, Brex, which has significant revenue, not quite $1 billion. I think it was like 700 million is the latest count, but a valuation much lower than yours. But it was the first mover, I guess you could say. And at your point of launch, it was already a unicorn. So how have you just plodded along, despite having this big competitor in the space, taking venture capital away potentially, and just surpass them, frankly, in all the measures?
Yeah, we were accused a lot in our early days of being, the second mover. We always thought we were like the 150th mover in this. When you think about companies, most of the juggernauts in this country, they started 175 years ago. Their founders quite literally wore top hats, and so it didn't bother us so much to come,
Where's your top hat? You need a top hat.
We'll work on it, we'll talk with the styling team. But look, when we approached this industry, it didn't bother us to come into this a little bit later. Our view was this was a large industry that was not aligned with the end customers. And also, when your founders maybe wore top hats, I think the importance of time isn't something you're thinking about every day. You've been around for as long as you've been alive, you'll probably be around, and so what's the hurry? We looked at these great companies in the Valley, whether it was of the last generation and still very present, the Metas, the Ubers, the move fast, create technology quickly, and it was so at odds with the financial institutions where if you were transported back in time and you had to use the bank accounts or the credit cards of 50 years ago, you'd probably be fine. But if you had to use the phones from 50 years ago, you and I couldn't do our jobs. And it just drove home there was very little product innovation. And so one of the things we set out to do in starting Ramp was we have got to be first aligned with our customer, help them spend less, be more successful as a business, had to be priority number one. And then number two, we would try to build this Valley-like company that is iterating very quickly, that is measuring in days, that is shipping products every single day. We shipped more products this year than there are business days, more features and announcements, and the goal that when you do that, the experience of how much time the products save just expands and compounds faster. And so we're trying to catch up what I think the financial services industry should have delivered over the last 50 years. We're going to try to do in just a handful and actually make our customers' businesses better because it matters.
And as you're looking at the product integration, you didn't start out as an AI company, but would you say you're an AI company now? How are you using it to make Ramp more efficient and your customers more efficient? Is it actually working in a measurable way?
For sure. So first, when you think about our customer base, we support over 45,000 companies of all shapes and sizes, from family farms to the Fortune 500. But for the majority, especially the small and mid-sized businesses, they don't have a single engineer at the company, let alone an engineer working to make their finance department modern, adopt AI, all of that. Here at Ramp, we spend over 50% of our R&D budget of our payroll on R&D, on engineering, on data science, on design, all focused with integrating the latest and greatest technology so that even if you're a small business, you are benefiting from what's happening in these research labs. And so one of the ways that it shows up for a customer is if you go and you tap a card at the store, you will get a text from Ramp saying, okay, you're on this business trip, hit 1 if this was a meeting with a business that you're meeting. 2, it's part of your travel budget. Or 3, and we're basing these off of the memos that are written. It's being written by an LLM. You snap a photo of the receipt, and we automatically match it to the right transactions. We auto-complete the accounting category. And what today most people are used to expenses being the worst hour of their month, very painful, takes a lot of work. On Ramp, you snap a photo and you're done. The entire expense experience takes like 10 seconds. And for most of our customers, they're not necessarily thinking, I'm buying an AI expense report. It's just an easier way to do business. And it happens to be that AI is how every single step is being sped up along the process. Does that make sense?
Yeah, it does. And do you feel like the companies are benefiting on the other end from the AI efficiencies you're able to provide? Because there's all these studies out, or there's one in particular that people keep talking about in MIT, where like all these corporate pilots are failing, and actually the people are failing to be able to generate more revenue thanks to AI, more efficiencies from a monetary perspective. And so I'm curious, just like, has Ramp increased its revenue because of AI? And can you prove that you're increasing companies' revenue because of AI?
I love that you asked this question. I think so. One of the things that's very unique in our industry, I think we're the first, and I still believe that we're the only industry to actually measure how much money and how much time have we actually saved our customers. Since inception, we've helped our customers spend $10 billion less than they would have otherwise spent and automated 27.5 million hours of work. When you look at the average company, though, we actually are able to help companies reduce their expenses by over 5% per year. Compare that to a rewards program. There's not enough interchange to fund more than, on the order of 2-ish% of a rebate. We are saving customers dramatically more than what's possible. And when you look at kind of the history of the company, when you first covered Ramp when we launched in 2020, we thought we could help the average company cut their expense by 2%. That's well over 5% today, in large part because AI is starting to go and complete the expense to do the books and accounting, to go and move money to higher yield. It's able to actually not just suggest, but to go and take action as a part of the process. And so, I think there's a lot of companies out there selling AI services but aren't measuring the results. There's a lot of companies selling you rewards, aren't thinking about the impact on the bottom line. Ramp from the jump has been focused on what is the ROI, what is the impact that we're driving, religious on measuring and reporting that out. And I think that's part of why our Net Promoter Score is in the 60s. It's comparable to an Apple. And I think that a lot of companies that are struggling now with all the AI they've sold that people aren't feeling so great about having the buyer's remorse didn't start with that simple insight of they should be thinking about what is the outcome they're driving and how do you measure it from the start.
And are you using AI to also kind of fight AI? Because I saw a story the other day about how there's now these AI receipts that look very much like real receipts. And all of our employees are very trustworthy, but there might be a bad egg throwing in some AI receipts in there. Can you catch that? Like, how are you thinking about blocking AI initiatives that when it's harder and harder to prove if something's real, like an expense?
There's a variety of ways. So first, when it was earlier this year, it was one of the newer GPT-4 models came out, and suddenly it was clear it was very easy for people to go and generate AI receipts. We partnered with the leading labs, OpenAI, Anthropic, and others, first to create detection systems, but we have a repository of over 100 million receipts that we can look at, of valid receipts. And so we actually have systems that, we're using AI to fight AI to go and block these transactions. It's something regular systems can't do. And next, because we have multiple sources of truth, we have the card and merchant data, we have the image data, we have the receipt data, we have the accounting data. We are much better than single systems like maybe Expensify or Concur, where you just get an image and that's the only thing you have to go on. Because we have multiple sources of identifying did this transaction occur, it's much easier for us to detect, what this receipt says the amount was, or the way, the LLM generated that receipt looks different than, these 1 million other receipts we have for this merchant. That's one large way. The second large way, and I think a lot of waste happens and fraud happens because managers are too busy. When you take a 100,000 person organization, a lot of people are spending time, as probably in this audience, going and checking, for your employee, should I approve or deny this expense? But the reality is you're busy, you have another job, you probably just hit approve. We've trained large language models to actually read your policy in depth. It probably has read it better than anyone in this room. It's audited and seen every expense, and our policy agents are able to actually go and automatically approve 90% of transactions from the jump. 5 to 10% that need attention, we can show you why it was in or out of policy. It's 99% accurate, which is about 10 times more accurate than the average employee. And what it means is it's a massive time saver. It's saving managers from this time in reviews, but it's also catching a lot of things that people would not catch. People spending companies' money that in the old world would have just gone through because no one had the time to look at it.
And as you're building all these tools that are AI capable, and efficiency and time and money saving can also equate in a worker's mind to my job. Is that my job you're coming for, Eric? So I'm curious how you're thinking about like in the most honest way, the bigger vision for if Ramp is really successful in saving companies time and money, what will that do to traditional business functions? Do CEOs need a whole finance department? Do they, if all goes to plan, do they need a human resources department even eventually? A lot of the core business functions, operations, like, is that the grand vision?
Yeah, well, I have two thoughts about this. I mean, one, you know, I don't know if, I don't believe that AI is smart enough to do the job of a CFO or a complete finance function, but it is definitely capable of doing your expense reports. It is definitely capable of categorizing transactions. And I think for most people, I don't think you're adding deep human intelligence when you're going and snapping a photo and you're describing what you bought and you're going and tagging transactions. It's very low-level work, and for most people, like, it is just the worst hour of your month. Why not automate these terrible parts of your job away? And it allows your best salespeople to go and spend that last hour selling on actually doing the work they were meant to do. And so we're very much in that phase of actually it's creating a lot of delight and joy for people in their roles. I think when you kind of abstract it and you look more long term, you think about like, what is the finance function? Where are people spending time? And at least on the spend side, a lot of it's really just algorithms. It's going and determining who should spend what under what circumstances. Once the spend has occurred, how do I categorize it correctly? That takes a lot of work. And then based on what happens, how do I goal seek to a better outcome the next time? So much of the finance function today, I would argue on the order of 80% of it is actually looking backwards. It's trying to figure out what did we do, what did we spend on, what's happening in the business. It's not asking the interesting questions that most people in finance got in to do, which is, you know, how do I make this business better? How do we spend on the things that matter? Where is value? How do I allocate capital better? And I really am a firm believer of, like, I think that the low level and work that people don't want to do, I think will go away. But I believe, and I'm fairly optimistic, that actually when you can go and your books are keeping themselves, money is finding its way to higher yield. One, for businesses, you're going to have a lot more at the end of the day. For the average American business, they have an 8% profit margin. If you can go and grow it even by 1%, it's equivalent mathematically to a 12% increase in revenue. And so I just think that bottom line impact to create more margin, to invest more, is going to be profound. And second, I think for people, the work is going to be more interesting. And so at least as far ahead as I can see and imagine, that's what I see. But, you know, we're just excited to be working on it.
So I want to leave a little bit of time for audience questions as well, but I'll ask a couple more leading up to it. I want to go back to what your experience in the current fundraising environment. What's it like to be the hot girl on campus? How frothy is it out there? And like, were you surprised by some of the investor behavior you've seen, given your last company? There's a bug on me, you. Nope. Your last company only raised $2 million, and now you've raised over $1 billion. Slightly different. So what's it like out there to be a fundraising startup that every investor seems to want to have a piece of? Yeah.
It is, I think for investors, I empathize certainly on the venture industry. There's more investors than ever. And I think that
everyone's a VC.
It seems like it. You know, get the part-time fund for you to invest to. Now, there is a lot of capital, and I think people are looking to find yield. And some of this is, I think it speaks to the world is changing faster than ever. I think that the way, like, we are in a world now where computers can see and hear and think and reason, and that's bizarre and has all sorts of profound implications. And I think we are, in some sense, in the world, multi-trillion-dollar jump balls in lots of industries, and I think that the stakes are very high, and that's part of why people are looking to invest. I'd also say that companies are growing faster than they ever have before. This company is 7 years ago.
Is that because there's so much money sloshing around? Like, why is now the moment that we're just, like, the numbers you're hitting seem unfathomable from even a few years ago?
Yeah. It is, I think that, one, I think that AI is making people more productive, but two, I just think that when companies are able to grow, and Ramp is doing this, while generating cash, at an unprecedented scale, VCs look at this and said, how could I not invest at it? Because if you're doubling, each year at this kind of scale, within months, that round that looked expensive proved to be cheap and inexpensive. And so I think that's part of what's driving this demand. And so there's fewer companies that are growing faster than ever. But I even think about another company, Cognition. It's a wonderful company that started on Ramp, Cursors, another one. These organizations are not yet 2 years old, but are doing 9 figures of revenue. And part of this is they are capturing the moment and selling new types of services. But the other part of it is, their finance teams are benefiting from incredible technology that in the old world they would have needed. I think it just would have been much tougher to kind of build up the skills inside of the company to deal with this growth. And so I just think the tools for builders are better now than ever before. Does
it ever make you nervous to be like, I started this company 2,300 whatever days ago, and I'm worth $22.5 billion? Like, the fulfilling on that, and especially if an IPO is on the horizon, then you're going to be answering to investors. Anxiety? Excitement? Anxiety, though?
Look, it's like I'm in my mid-30s. I think you always look up to people, many in this room, who've been building great organizations and wanted to be that one day. And so, I feel very, very lucky to have the opportunity to do this and to be able to work on something that I'm really passionate about. But for me, I think valuations in some sense are, I think they're a derivative. It's not the thing. It's not the reason. The revenue comes from customers genuinely feeling that their trust was well earned, that when they signed up for a product, it actually delivered. And it delivered so much that they told other businesses about it, that we made their business better and more profitable, that they're able to grow faster. And in some sense, I think for anyone building the business, you start these things, I believe, because you just hope to make a difference in the world in some kind of a way. And so, the valuation is one thing, but the numbers I care much more about are really, really how much did we save customers this month? Did we make people better off? And I think that's why some of the best engineers in the world want to come to Ramp. I think that's some of why the best designers are working on. You wouldn't think that these people are interested in corporate cards and expense management. How is this
not the sexiest historically business to be in, but yet you're attracting great talent.
It is. We think it is now. It's and it's not just the hot yellow that the Ramp brand is doing and the fun ads. I think it's for people who want to matter in the world and have some kind of an impact. I think this is a real way to do this and do it quickly.
So I want to toss this. Anyone have a question in the audience here in the front?
Hi, I'm AJ from Pickle Robot. I've been a customer at least since 22, so I didn't realize how early that was.
Thank you.
The socks are really cool. You said that you were using some LLM-based technology and convolving that with receipts and other single sources of truth that you have access to create a 99% accuracy for comparing against spending policy?
Yeah.
How? That seems against my expectations of what LLMs can do.
Yeah, so a couple things. One, we spend a lot of time first, when you think about kind of what the expense policy says, these are living, breathing documents, but for most organizations, often haven't taken the time to go and actually write these policies out. And so we can spend some time afterwards to go and see how well built out the policy is together on your instance. But effectively, we write a fairly complete policy because we've seen probably more expense policies, I think, than anyone. You'll go through that experience, and effectively we can compare, are there holes in this or in and out, and so we kind of clarify the gaps. Then once people are spending, functionally, because we have context from the merchant, what was the nature of the category, maybe from your HRIS system, who reports to whom, and also receipt data, we're able to go and take a string of text and connect it to a merchant. That LLM is functionally able to do a fairly discrete job of matching, here's the policy, here's the transaction, here's the receipt. Do these all connect? And we can actually go and show you, and it's on 90% of transactions, we are fairly certain these are in. On the next, we need some more data, and those we surface up. And so the 99% accuracy is really on this 90%, and that's getting more and more. And so after a few months, I think about Notion, about Quora, some of the early users. I think now they're really auditing on the order closer to 5%, not like the 10% out of the gate. And so it's through repeat usage in that training that goes up.
In the back?
Howdy. I'm Brad Foreman, managing partner over at the Charles Group in New York. We're in the advertising business, and we were just sort of ramping up the business, and I was looking for an Expensify type of platform. And that was a main competitive advantage that I saw with you guys. I think probably one of your first customers in whatever, the first 1,000, but I saw that you didn't charge any money to use the platform, right? And my big question was sort of, it wasn't necessarily the better software edge, right? I'm interested, could you walk us through how you achieved like the negotiation with the banking partners, the strategic choices that convinced them to back a new player at scale to give you, what I assume is like, they're paying you for that volume or something to that regard. Is that right? Or I'd love to know a little bit more about how did you achieve that? Because that seemed like the secret sauce that sort of took you guys off at first. Is that right?
Yeah. And so the question is, why did the banks initially partner with us?
Right, like over, for instance, expense, because in my mind, I mean, it just destroyed, any other company that didn't have that competitive
Yes.
advantage.
It's so there's probably two great parts of this. So one, we work with a number of banks, like Sutton Bank, Celtic Bank, Lead Bank across the country, and these are great regional banks with all the capabilities that the large and maybe too big to fail banks have in order to issue great cards. But it was hard for them to compete and bring in their own customers. And we came to this value proposition of we believe we can generate card business and we can bring customers and bring that kind of marketing edge and invest in technology. And so if we do that well, to your point, it would be a great proposition for them. It would grow revenue, and we would have a great partner that would allow us to create great financial product for customers quickly. And so that was the value proposition to them. When you think about the customer value prop, and I love that you brought that up, I think that a lot of people don't have a very healthy relationship with services like Expensify or Concur. They pay a lot for the software and don't like it. And it turns out cards are wonderful businesses. They're very lucrative, and we just thought that instead of investing all this money in lounges and more elaborate kind of points programs, we said, let's invest this in great software. Let's give away expense software. Let's automate accounting. And it turned out that stream of revenue was actually more substantial than what over time these expense platforms could invest in. And so we are now investing just radically more than any of these expense platforms are. And so some of what we're trying to do is almost like what did Amazon Prime do for consumers, where this flywheel, every year it gets better. We are trying to do that by creating more and more better software each and every year. But it's a great question. Thank you for asking it.
So Eric, for a final question, I want to kind of get inside your brain as a CEO. It's really hard to be a CEO these days, as you know, and navigate all the change. And I can't imagine what it's like to go from you sitting there with Kareem, thinking you're going to start this big, awesome company, but it's just starting out 2,000 plus days ago, to what you've achieved today. How have you scaled yourself? How have you gotten yourself ready to meet the moment of what Ramp is today?
It's look, I try to approach it with a lot of humility. There's a lot of things I don't know, and I think one of the problems of compounding growth is, whatever allowed you to grow by 100% over the last year will, by definition, if you don't do something about it, you might only grow 50% the next year, 25% the next, and so you can know certainly what got you here will not get you there, and so it forces you to constantly look in the mirror and say, okay, what was I great at that I need to give up? Because the game has changed a lot. And so I think it's a lot of just being real about that. It's not about getting, a little bit better at the small set of things, but actually trying to put yourself out of the job very, very often. I think
You mentally try and put yourself out of a job?
I do.
How do you do that? Do you think about what would bad Eric do today? How do you think about that?
Well, I mean, for me, there's things that you learn about yourself. Like, for example, I'll put it this way, if there's 100 things to do, I'm the kind of person that's like, well, think about what are the top 10 most interesting things, and I'll do those and drop the other 90, and in the early days, no big deal, but at some point that will kill you because those other 90 things need to get done. So I try to look for great operators, people who are not going to drop the ball, people who are better at sales, better at pieces of marketing, better at engineering. I actually think it's a joy to kind of go and find people who can teach you things, put them into roles and give them the org, and try to focus on the areas that just I can do, or maybe I have a little bit of an edge, and actually make sure the return to my time is higher. And so some of it's that. Some of it's trying to surround yourselves by great mentors. I think about people like Fiji Simo. She was the CEO of Instacart, took them public, to now she's at OpenAI. Satya Nadella is a great mentor. And I think some people pursue coaches. I try to kind of go and call people up for an hour at the time, where if I can just get their advice on AI or marketing or sales, learn just a little bit, ask them who they've learned a lot from in particular fields, and just kind of jump from person to person, and that's been very helpful. And then, last, I think, end of the day, all a company is a collection of people. You forget it along the way, but it's still true. And I think that if you can go and build a strong team, try to empower people to double down on what makes them great, not try to go and fix their deficiencies, that'll help you have a much more well-rounded company. And so still learning, open to advice, and trying our best, but it's been a very fun ride.
Well, Eric, it has been so fun to watch what you've built at Ramp, and we're going to continue to watch it at Fortune. Pick up the next issue. You'll see a big feature on Ramp and their explosive growth. But thank you for spending time with us today.
Thanks so much, Alyson.